31 मेंबर्स जो स्टार्ट कर सकते हैं थोड़ी देर में, लोग ज्वाइन ही कर रहे हैं. So I welcome you all and welcome you all back to this masterclass by Anmol Arora. So this masterclass will basically cover कि आपने पैसे कमा लिए, अब उस पैसे को इन्वेस्ट कहाँ कहाँ करना चाहिए, कैसे करना चाहिए. जैसे काफ़ी सारे ऑप्शंस होते हैं. चलो स्टॉक मार्केट एक ऑप्शन है, तो स्टॉक मार्केट में भी अलग अलग कि आपको म्यूचुअल फंड खरीदने चाहिए या फिर स्टॉक्स में डायरेक्टली इन्वेस्ट करना चाहिए. तो काफ़ी सारे ऑप्शंस होते हैं आपके पास. उसका भी एक फिक्स्ड परसेंटेज होता है कि आप कितना परसेंटेज आप स्टॉक्स में डाल रहे हो, कितना परसेंटेज आप म्यूचुअल फंड में जा रहे हो, और कितना थोड़ा आप रिस्क अवर्स हो सकते हो तो क्रिप्टो वगैरह खरीद रहे हो. बाकी अगर आपको बिल्कुल ही सेफ खेलना है तो एफडी में डाल लो. काफ़ी सारे वो होता है कि एक रूल ऑफ एज होता है कि जैसे आप यंग हो तो आप थोड़ा ज़्यादा रिस्क एपेटाइट ले सकते हो आप. तो ऐसे एग्जांपल्स और काफ़ी सारे रूल्स अनमोल इस पूरे सेशन में कवर करेगा. इससे आपको मतलब काफ़ी हेल्प होगी. और अनमोल का खुद का एक्सपीरियंस 3+ ईयर्स ऑफ इन्वेस्टिंग का है. सो जब से हम फर्स्ट सेकेंड ईयर में थे तब से अनमोल मतलब अनमोल ने ही एएमसी जो क्लब है हमारे कॉलेज का वो स्टार्ट किया था. तो उसमें डेली न्यूज़ डालता था अनमोल, और फिर काफ़ी डेली हमारे डिस्कशंस होते थे. सो वो सेम कम्युनिटी का हमने पार्ट उठा के हमने स्टॉक बेट स्टार्ट किया. तो स्टॉक बेट्स में बेसिकली कम्युनिटी पार्ट प्लस अब कम्युनिटी के साथ एंगेजिंग प्लेटफॉर्म भी प्रोवाइड किया हमने. तो अनमोल से ही हमने इंस्पिरेशन ली थी, एएमसी से इंस्पिरेशन ली थी हम कैसे इसका कुछ एक यूजफुल प्रोडक्ट बना सकते हैं. और अब अनमोल ने अपना एक्सपीरियंस यूज करके जेपी मॉर्गन में प्लेसमेंट लिया. तो हम लोग का साथ में इंटर्नशिप था जेपी मॉर्गन में. मतलब मैंने भी नोटिस किया था सबसे हार्ड, वन ऑफ द हार्ड वर्किंग बंदा था ये, इसलिए पीपीओ भी मिला अनमोल को. सो आई थिंक आई वुड लाइक टू गिव अनमोल द फ्लोर नाउ. अनमोल, आर यू इन द कॉल?
Yeah, thank you, Vedansh. So, yeah, hi everyone. I am Anmol, and as Vedansh already introduced me, I did an internship at JP Morgan with him. And yes, I have some years of experience into investing, stock markets and mutual funds. And also started a club in our college, अगर तुम लोगों ने सुना हो, that is Asset Management Club. So I started that along with Utkarsh. I think he is also on the call. So yeah, we started it together, and our main aim is to, provide financial literacy to everyone because in our curriculum we are not taught all that how to manage our finances, how to, manage our taxes, what to do with the money we earn. Even if you look at any trader in the market, for example, तुमने बहुत सारे देखे होंगे on YouTube that people are earning in crores or multi-millionaires, but उनका एक चीज is very common is that they only trade with a fixed capital. जो जो उनके profits होते हैं that they invest into mutual funds or fixed income assets. So it is very important to invest some amount of money in these sort of investments such as mutual funds or bonds or FDs. So today we will talk about mutual funds. uh, Vidash, can we start the full session अगर सब आ गए हो तो?
हाँ हाँ, कर देते हैं स्टार्ट, और स्क्रीन शेयर भी कर लो.
Okay. Just a second, guys. uh, is it visible? Is my screen visible to you all?
Yes, it is visible.
विजिबल है.
Yeah, okay. So, ठीक है. In the last session, all of you must have got a basic idea about what
Just
are
a second,
stocks.
just a second. Anmol, can you do it in slideshow mode so everyone can see properly?
Is it okay now?
No, it's not in slideshow mode, it's in the normal mode.
Yeah, I think I have put it in the slideshow mode
तो
because
तुमने
मेरी side.
मतलब विंडो विंडो गलत वाली शेयर की होगी.
Is it visible now? Slideshow mode.
सेम ही है, कोई बात नहीं, ऐसे कर लो. चलेगा?
मैं कंप्लीट स्क्रीन शेयर कर देता हूँ। अब ठीक है?
यस 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 यस।
Okay, so last session, May, you would have got a basic idea about what are stocks. So I'll also tell you in this session कि stocks basically are you have some sort of ownership in a company. For example, अगर एक company की valuation is 100 rupees and you own 1% of that company. So that means that अगर उस company whatever the profits they make or whatever the decision making is, they will have to ask you guys, be it investor, they have various sessions, various calls in which they invite all those investors so that they can be a part of the bigger decision making. So in that way you can invest into the very big businesses such as Reliance or Infosys and be a part of their profit sharing. And as the valuation grows, for example, you invested in Infosys at the valuation of 100 rupees, and for example after 1 year the valuation grows to 150 rupees, and your ownership in that Infosys company is 1%, तो तुम्हारे ownership की value will also increase. That way you will make money. So this is what investing into the stock markets are. But a lot of people do not have that much knowledge about stock market, or they do not want to take that much of risk or do that much of research about selecting stocks or diversifying their portfolio between large cap, small cap, different type of stocks. So what another alternative we have are mutual funds. So mutual funds are basically a pool of stocks, and in that pool of stocks, investors like us, we put in our money, and there is a company who has made a mutual fund. They take in our money and invest that pool of money into a pool of stocks. And in return, they give us some units. And those units have some value. So as the value of those units increase over the time, the value of our investments also increase. So that is what is written in this slide, is that mutual funds are basically a fund manager or a professional is taking our money in small bits and is making a large pool of money, thousands of crores, lakhs of crores. If just Google on, you just go on Google and search the size of stock mutual fund industry in India, it is over 50 lakh crores. And even if you look at very big mutual funds, their assets under management are close to 10,000 crores or 20,000 crores. So there are that big mutual funds out there in the market. What they do is they take money from small investors like us. We can invest as low as 100 rupees or 1,000 rupees, and in return we get some sort of units, and the value increases just like stock market. But here we are not doing any sort of research. We are just looking at the past performances, or there are various metrics that we will talk about in this session later on. So it's just that you're giving them money and they are investing on behalf of you, and for that they are charging a very little fee. That also we will talk about later in this session. If anyone has any doubt, like what is mutual fund or anything related to this slide, they can ask. Or are we clear with this one? Okay, then let's move on to the next slide. I've just added this slide to, for those people who have basic idea about mutual funds, to, get some idea about what is the structure of a mutual fund. So there are sponsors, there are trustees, they make a company, they hire a fund manager, and they launch a fund, and then they collect money from investors like us, and then they invest that money into the market. So that is the basic structure of a mutual fund. You can look at this, but it's okay if you do not understand much about it. This is just for reference I have put in this. And now we will talk about the asset management company. So as I already told you that There are companies who take small amount of money from a large set of people like us. For example, there are 1,000 people who are investing 10 rupees. So 1,000 into 10, we get 10,000 rupees. So that company got 10,000 rupees. Now that company can invest those 10,000 into whatever they want. By, for example, they can invest that money into very high risk stocks. Then there's option of investing those money into low risk stocks accordingly. And there are different type of mutual funds. So this is what an asset management company does. They take in money from a lot of people like us, and then they invest that money into stocks. So this is what is all written over here. We'll move ahead. Now, this is very important. The different types of mutual funds. So on the basis of structure, there are three types of funds: open-ended funds, closed-ended funds, and internal funds. So if you go on internet and look out for mutual funds, or if you would have seen on the Instagram reels, सबसे ज़्यादा common mutual funds are the open-ended funds. Open-ended funds are those funds which are once launched into the market, they do not have any maturity. मतलब, for example, if a mutual fund was launched in 2013 or 2008, so it is still running. There is no maturity period for like मतलब ऐसे कोई maturity नहीं है कि after 10 years the mutual fund will stop investing into the market. It will carry on. This is the most common type of mutual fund, and it can be equity mutual fund. Equity mutual funds are the funds that invest in the equity or the stock market, or they can be debt mutual fund or different type of fund. So the structure is just on the maturity period. Like open-ended funds do not have any maturity, closed-ended funds have a maturity, and interval funds are those funds which are open for a fixed interval of time. For example, they can be open to investing for a month, or for a period of time. They are not open to investing for infinite period of time, unlike open-ended funds. So that is based on the structure. The other type of the mutual funds are based on the investment objective. So here it is written: debt funds, equity funds, and hybrid funds. Debt funds are those funds which invest into fixed income securities. Fixed income securities can be, the government securities, because the government also needs loan. अगर if you are following the news, you must have heard about अगर कोई भी सुना होगा that this government has taken this much amount of loan. What is that loan? That are basically gilt funds. The government is taking loan, and in return they are giving us a fixed percentage of income. For example, 5% return they're giving. So that is a fixed percentage of return. Equity funds, on the other hand, are the funds that invest into the stock market. For example, there is an equity fund, and that invests in, for example, Reliance or Infosys or HDFC. So those are equity or the stocks, because those are publicly traded stocks. So that is equity mutual funds. And hybrid funds are those funds which invest both in debt and equity. So those are hybrid funds. मतलब, there are mutual funds that invest 50% into equity and 50% into debt. So those are called hybrid funds. And the other type of classification is based on the investment style. Now that is passive and active. Now this is very understandable. As the name suggests, active funds are those funds which are active. They are actively following the market. That can be, for example, a small cap fund, एक fund है which is very high in risk, because it is giving very high return. अगर for example, there are two types of fund. एक fund है which gives 10% return, and एक fund है which gives 25% return. So of course, अगर common sense से देखा जाए तो the fund which is giving 25% return needs moderation, needs someone very professional who is looking after the fund every other day, who is constantly monitoring it and taking some decisions whatever they are. So that needs a lot of money because उसमें resources लग रहे हैं. There is building, there are employees, उसको salary देनी है, and then operational charges, a lot of things are there. So those funds need constant moderation. Other type of funds are passive funds. Passive funds can be, अगर एक fund आया in 2010 and they decided to just invest their money into two stocks, Reliance and HDFC, and उन्होंने वो पहले ही बता दिया. So what they will do is they will not change their strategy because that was the motive, and वो ही अनाउंस करके दे टुक द मनी ऑफ इन्वेस्टर्स लाइक अस, एंड हमने वही सोच के पैसे दिए. दोज आर पैसिव फंड्स. अब when the strategy is fixed, so that does not require constant moderation, that does not require a lot of people or a big team or a lot of money to keep that fund going on. So those are called passive funds. तो of course इसमें फिर उनकी फीस कम होगी because they do not require active moderation, so they will charge lesser fee. So these this is the classification based on investment style. I think all of you are clear with it. If you have any doubt, you can just ask me anything. Again, if you have any doubt on open-ended, closed-ended, interval funds, or the debt equity hybrid funds, or passive active funds, मैं अभी I'll just give you classification. इसके बाद we will move on to the real investing platforms such as Grow or Coin, and then we will look out for different kind of funds, and then we will look for how we can invest and what is the benefit of investing, what kind of wealth we can create by investing. I think everyone is clear with it. If you have any doubt, you can just uh, type in the comment section, or Vedansh, please tell me if anyone comments, or you can just unmute and ask anything. I'll just wait for 10 seconds. If you have anything, you can ask me. I'll also share some links. You can go there and probably look out for more information about open-ended, closed-ended interval funds, or debt equity hybrid funds, or passive and active funds. I'll share links for everything. You can just go there and read about it if you are really interested. I think we're clear with it. We'll just move on to the next slide. So this is what is written, what I just explained, that open-ended funds have no fixed maturity, and because there is no fixed maturity, people will continue on buying, and you know you can buy the funds at any rate because there is no maturity. And then closed-ended funds are those funds who run for a specific period of time, and interval funds are those funds who are open for a specific interval of time. And then on the investment objective, we have debt funds, aim to provide regular income because the companies who are taking the debt, they can be companies, they can be governments who are taking the debt, and they give they announce that we will be giving, for example, 5% or 6%. So they they will always announce the fixed percentage what they will be giving. So debt funds, you can expect a fixed amount of return. Equity funds are very volatile because you do not know what happens in the market. And hybrid funds are those funds who invest in both. You can also make your portfolio hybrid by investing in both equity and debt funds. So that is up to you. And then passive and active funds. Passive funds are those funds which do not require constant moderation, and here you can see the expenses are lower and no active selection of stock or the sector because the strategy is pre-decided. And then active funds are those funds which which depends very much on to the market, how the market is behaving. So this requires constant moderation because they have sort of target to achieve. That may be an amount of that can be percentage return, that can be to reach a specific NAV, or it can also be to reach a specific size for the mutual fund. So it is completely strategy based, and the strategy can keep on changing, but for passive, it does not change. Okay, so now, yeah, same thing. What are open-ended funds and what are debt funds and stuff like that. How you can invest into the mutual funds? This can be done in the form of This can be done in the by there are offline companies. You can go to their shops or their offices and ask for mutual funds. You can go there and say that I want a mutual fund. I want to invest this much amount of money in their offline offices. Another type of investing is you go on online website of any company. For example, there are a lot of companies like Grow, there is Zerodha, Upstocks. So a lot of companies are there. You can just go on to their website, do some basic KYC stuff, put in your money, and then you are ready to buy mutual funds. And then this is the basic stuff that what is KYC, what all needs to be done, and this is the basic procedure. You go to a website, you do your basic registration, KYC, provide your basic details, enter your bank account, and then you also need to, give your cancer check or uh, a pic of your passbook, stuff like that, whatever they ask, so that they can keep on keep on deducting whatever the amount you have set, and yeah, things like that. Now, this is very important. When you are investing in the mutual funds, you can invest in two types. First is lump sum investing, another is SIP investing. So, lump sum investing is, for example, you have 1 lakh rupees and you plan to put in all that 1 lakh into into mutual fund. So, you put that money and that is one time investment. You are not putting 1 lakh every month because you don't have 1 lakh coming in every month. So you, for example, you got a bonus or you sold your car and you have 1 lakh additional in your bank accounts and you want to invest that money, so you can just put that 1 lakh into the stock market. That is lump sum investment. You will not be putting or you will not be following that investment in the following months. That is just a one time investment. So that one time investment is called lump sum, and that is generally large sum of money because that is invested in one go. The other type of invested investment is systematic investment plan. Systematic investment plan, or SIP as we all know it, that is, a commitment. For example, this can be for 6 months, for 1 year, for 3 year, for 5 year, or there can be no, maturity period for you. For example, if I am 21 years old and I start a mutual fund today and I plan to put money every single month till the day I retire. And for example, I have set the my retirement age to be 50 years. So I still have 29 years. So that is my period of commitment. And I plan to invest some sort of money every month. So that is systematic investment plan. You have specific intervals, you have specific dates that can be, if I get my salary on the last working day of a month, so I plan to invest into the mutual fund on the very first day of every month. For example, when we were working, when I was in JP Morgan, I used to get my stipend on the last working day of a month. So what I had done was I used to invest into the mutual funds on the first of every month, so that I don't get a lot of time to waste the money that I'm earning. So I used to invest some part of it into mutual funds. So that was systematic, and that was my commitment. So that was it. And also you will also see, because lump sum investment can be risky, is risky because if you must have seen the crash that was followed by the COVID. And for example, if you had invested 10 lakh rupees just before the market crashed, so your investments would have, reduced by 40% or 50%. But instead, if you had chosen SIP, in that way, you would be investing when the markets were at their highs, and you would also be investing when the market were at their lows. So this is very helpful because In that way, you are investing in every kind of scenario what is out there in the market. So what I feel is invest SIP is very good sort of investment. Lump sum can be done, but it requires a lot of research so that you do not lose your money. Okay, now there is another type of investment modes in the mutual funds. One is direct mutual fund, the other is regular. I'll just say that you should always be looking out for direct mutual funds and not the regular ones. Now, what is the difference? Direct mutual funds are the funds that are offered directly by the fund house. They are not, brought to you by some intermediary. For example, if you're buying a market directly from the farm, if you're buying a vegetable directly from the farm, or if you're buying it from a local vendor, so there will be a price difference. That is what it is. If you're buying direct mutual funds, you are buying directly from the fund house. You are not buying it through an intermediary or through a middleman. Regular mutual funds have middlemen, and that is the reason they are expensive. They have higher expense ratio. So there are no commissions there or brokerages, or returns are higher because you save that 1% in the expenses, which is not the case with regular mutual funds. So just keep in mind, whenever you are investing into the stock market or into the mutual fund, always look for direct mutual funds instead of the regular ones, because regular ones are those mutual funds which have intermediaries, which have middlemen, whereas direct, as the name suggests, are directly offered by the mutual fund house. Yeah. Now this is growth option, dividend payout option, and dividend
Anmol,
re.
I
Yeah,
think screen share just stopped. Can you share again?
yeah, sure.
I think there was some glitch.
Is it visible now?
Yes, yes, it's
Okay.
visible.
Okay, cool. So now we will talk about what are growth options, what are dividend payout options, and what are dividend reinvestment options. So what mutual fund companies have to offer, they offer growth option. Growth options are the mutual funds in which, for example, I already told you that the mutual funds are a pool of stocks. So that pool will, of course, make some sort of profits. And as they're investing into very big companies, so they will also be getting dividends. So growth options are those kind of funds which reinvest that dividends, those profits again into the mutual funds, and the NAV is increased. NAV is net asset value. NAV, I will talk about this later in the video, in the session. But for now, you can just take NAV as the stock price. So, realized profits or loss is treated as capital gains or loss. Everything is written here. What is the basic difference between these three are growth options, reinvest, dividend payout option, they declare dividend from realized profits. So, there are mutual funds in which you can invest your money, and whatever the dividends they make, they will distribute those dividends. So those are dividend payout options. And then there are dividend reinvestment option. And it is written that dividend is reinvested in the same scheme by buying additional units at X dividend price. So your units will increase, unlike the growth option. Growth options, your NAV will increase. Okay, I think everyone is clear with this. If you have any doubt, just ask me. I will also share the PPT with you, and I will also share the links that I was talking about and everything which we will talk about in this session. I think we can move ahead now. And this is basically how you can check about the information of that particular mutual funds. For example, if there is an IPO, so there are DHRF documents. And for mutual funds, you have SID and SAI. In this, you can, know everything about the fund. But trust me, you do not need all this. You can just go on to any famous company, for example, Zerodha or any famous broker, and they will have all this information, whatever is required for you to know. So you do not require all this information. But if you want to know everything about the fund, then these are these are the documents that you should be looking for. And now this is the Risko-o-Meter and the importance of this. Every fund will, every broker will, tell you how risky the particular fund is, whether it is low risk or whether it is high risk. So as I already told you that equity mutual funds directly invests into the stock market. So stock market, everyone knows, is very volatile. So that directly implies the equity funds are very risky. Then there are debt funds. Now, as I already told you that debt funds invest into fixed income securities, like FD is also sort of debt. So that offers fixed return. So that is low risk because at the end of some period you will be getting that fixed return. If the company doesn't go bankrupt, you will be getting that particular amount of return. And then there are hybrid funds. They are generally moderate because they invest some sort of money into the equity and then some sort of money in debt funds. So those are hybrid. So those are moderate in when you're talking about the risk. And I think we're done with the PPT. Now I'll just go on the internet and show you all how you can look out for mutual funds and what are the things that you should be looking for. Okay, I think I have everyone's attention. Guys, are you there? Okay, I'll just start.
Anmol, we actually have a doubt in the chat.
Yeah, sure.
What is the maximum return I can expect from an SIP?
Yeah, we will talk about it. And just so you know, as I already told you that there is a risk associated with every sort of investment. For example, if you are investing into the stock market, and for example, you're investing into an equity mutual fund, and that also small cap fund. So I will show you that small cap funds have generated over 25% year on year from the past 10 years. So you can generate as high as 25%. And if you do not want that kind of risk, so you can also invest into low risk funds which invests into debt securities. They offer 5 or 6% returns. So the scale can be from 5 to 6% to as high as 25 to even 30%. So the range is very big. That totally depends upon your risk appetite. If, for example, people like us, if I'm assuming you're also 20 years old or 21 years old, so people like us should be investing more of their money into higher risk mutual funds, the small cap or the mid cap ones, because at this age we can take up a lot of risk because we do not have the responsibility of our children or our uh, partners, so we can take a lot of risk, and that risk will definitely help us generate a higher return. Now I'll just share my screen. So these are the websites that I personally follow if you're looking for investing into mutual funds. And then there is SIP calculator. These are the things that you should always keep in mind, and this will also help you to, make better decisions. So this is Coin by Zerodha, and when you open their mutual fund platform, which is Coin, so you get to see this page. Here you have options like equity, debt, hybrid, solution oriented, and others that I already told you. So if we go on equity funds and you go on any fund, so you get to see everything about the fund, and there are a lot of funds out there. So this particular uh, web page has 854 results. So you can imagine there are a lot of funds out there. So for example, we go on this particular mutual fund because I want to know about this fund. So if you go on that fund, you will see, as the name suggests, HDFC Mid Cap Fund. Now, I think every one of you know what are mid cap opportunities. I'll just tell you basically, large cap funds are those funds which have, very high valuation. Then there are mid cap funds which have slightly lower valuation than the large cap ones. And then there are small cap funds which are, smaller companies which you may not even have heard about them. So that is the basic segregation between small cap, large cap, and mid cap funds. So if you open any page, any mutual fund, you will see every information that is there, that is public about that particular mutual fund. So it is written direct. I told you that there are two type of fund, direct and regular. So every time we should be looking for direct funds, not the regular ones. Growth. This signifies that the dividends and the profits that the fund will be making, that will be reinvested into the fund. And then this shows that this is an equity fund, which means that this fund will be investing into the stock market. And then mid cap, this suggests the strategy that the fund will be following: large cap, mid cap, small cap. Small cap has the highest risk but can also help you generate the highest amount of returns. Then there are mid cap, where the returns can be slightly lower, and then large cap. Large cap are basically very large companies such as Reliance, HDFC, ICICI, Access, and the risk associated with investing in those companies is very low, because you cannot say that Reliance kal band ho jayega or 10 saal baad band ho jayega, because every one of us know that it is a well established company and it will not shut in 10 or 20 years. It will carry on, और उसकी valuation भी रहेगी. If the company is valued at, for example, 10 lakh crores, so it will not be someday will go to 1 lakh crore. वो बढ़ेगा ही या फिर सेम रहेगा. It will not go that down by 50% or 90%. So that is considered to be a safer investment. Okay, so now going forward, you are seeing the current NAV. Net NAV is net asset value. You can consider this as the stock price, and this is set by various parameters, like what amount of returns the company is generating and how much profits are they making, because the profits are reinvested into the mutual fund. And if the mutual fund is making very higher profits, then of course the NAV value will also grow much higher. So this is what NAV means. Then there is CAGR. CAGR is compounded average growth rate. This means that, for example, the mutual fund I made was priced at 100 rupees. Total value was 100 rupees, and the CAGR is 50%. And for the first year, it went from 100 to 150. Now for the second year, it will go from 150 plus 75, that will be 225. So that means that 50% will be, put on compoundedly, not simple. You know the difference between simple interest and compound interest? That is what is used here, compound and simple. So you can go here and check for what is the 1 year return. For example, this particular fund has given 48%, which is a very high number, 48% for the first year. And then for 2 years, it has given continuously 27%. That means that it went from 100 to 127, then 127 plus 27%, whatever it is. And then you can also go and look for 3 years. For 3 years, it has consistently given 31.15%, which is a very high number considering FD options, which are just giving you 6.5%. For 4 years, it has given 30% return, and for 5 years, it has given 24.25%. So that is a very high number. The mutual fund that this mutual fund is offering. And on this graph, you can look out for the NAV. You can see that in 2013, when the mutual fund actually started, so it was not even close to what it is at this moment. It is 164, so close to 10x, 1000% returns are we have experienced in this fund. So you are seeing how much crazy amount of money you can generate from investing into the mutual funds without even using your brain. You just need to give the money, and the mutual fund will invest accordingly. Now, here you can see the minimum investment. So you can invest as low as 100 rupees. 100 rupees is nothing. If for example, if you had invested 100 rupees in this fund, it would have grown to 1000 rupees, 10x. So now you can imagine if your 1 lakh would have grown to 10 lakh, your 1 crore would have grown to 10 crore. So that sort of crazy money you can create by investing into the stock market, into mutual funds. This is asset under management. This shows that how big that particular mutual fund is. So for stocks, we have their valuation. For example, you must have heard about unicorns. What unicorn basically means is the company has a valuation of over $1 billion, some close to 8,000 crores. So that is a valuation of a company. Similarly, in mutual funds, we have assets under management. This shows that what is the amount of assets that particular mutual fund is managing. Now we have exit load. If you just click on this info button, here you will see that what is exit load, what is the meaning of exit load, and how much will be charged. So it is written here that exit load of 1% is payable if units are redeemed or switched out within 1 year of the date of allotment. For example, if you buy a mutual fund today and then you plan to take out your money after a year, after a month, so then you will be charged 1%. The reason why they are charging this is because the fund manager is trying to make this sort of returns. You have seen 50% return, 30% return, 25% return. So that is generated with the strategy in mind. He must have a thought of investing 10,000 crores in this stock, then 5,000 crore in this stock, and then 5,000 crore in this kind of debt security, whatever it is. So by redeeming units, you are just playing with his investment style. So for that, they charge a basic fee, which is 1%, and that is sort of a punishment for taking out your money before before 1 year. And almost every fund has a exit load, whether it is 1% or 0.5%, but it is not higher than 1%. Always the mutual funds try to keep their exit load or expense ratio lower than 1%, so that it is easier for investors like us to take out our money in case of emergencies. Then there is expense ratio. When you click on expense ratio, you will see everything about an expense ratio. So as I already told you that in when you are investing into mutual funds, what you're basically doing, you are giving your money to a person who is professional, who has a team, and who has a lot of resources. So he will be taking care of your money. That is basically managing your money. But he will not do it for free, of course, because that is his job. So he needs his salary, he needs to pay his employees their salaries, he needs to run his office, pay the electricity bill, and pay the land bill or whatever the bills are. So in exchange of managing your money, the fund manager or the company charges a very basic fee, which is 0.5% or 0.2%, which is generally lower than 1%. So they charge a minimal fee of less than 1% for doing all this for you. So that is what expense ratio basically means. You will be charged for managing your money. You can read more about it in this particular web page by just clicking here. You'll see everything about a mutual fund, because I told you now, you do not have to look in those documents, those SID documents. You just need to go on whatever platform you like, and then you can know everything about that particular fund. Then it is written here that very high risk, because that it is investing into equity, and equity is not in anyone's control. If other day India gets into a war, then the stock markets will of course fall by 40%. So that is in no one's hand. So of course there is very high risk involved. The fund manager's name is also written. You can click here and know more about the person which is handling your money. And they are very professional people. They have a lot of experience, 10 to 20 years of experience. They have been doing this from a very long time, so they know everything about it. And then when you go down, you can also see the sectors that the fund is actually investing in. So it is written that 21.5% of your money will be going into the financials. Financials will basically mean banks or insurance companies or NBFCs or fintech companies, all the companies that have involvement with money, with managing money, giving out money, with finance. So those are financials. Consumer companies are those the FMCG companies. For example, P&G, ITC, Britannia, Nestle, all those. Then IT may you will have Infosys, TCS, all those companies. Then materials, then industrials. So you can see everything about it, and then you can also see the companies that they have invested in, like Indian Hotel Company. Basically, the Taj comes under this. Then Federal Bank, Apollo Tires, Max Financial Services, Tata Communications Limited. So you can see all the companies that the fund is investing in plus their asset allocation. For example, if you invest 100 rupees in this particular fund, so 6.49 rupees of 49 rupees will be going into TREPS, and then 3.68% will be going into IHC, 3.44 will be going into the Federal Bank. So you can see everything about the fund, and you can know where your money is getting invested. And then you can also see the scheme document that I was talking about. Now you have two options. Whether you buy is lump sum investment. For example, you can put in 1 lakh rupees, you can put in 10 lakh rupees, and this particular platform will not ask you to invest 1 lakh another month. This is just one time investment. So that is what the buy option will offer you. These are just lump sum investments. Then the SIP. Now SIP is, you can have initial investment. That is your first month investment. And then you have installments. First month investment is, for example, I just got a job and I am getting paid 1 lakh rupees per month. So I am thinking of putting, 20,000 a month into the mutual fund, and that I need to follow every month. So I can just put here 25,000, and this is the amount that will be deducted on the first month. Then installment amount would be the amount that I need to pay every month. Now, initial investment can be varied. It can be anything, but installment amount will be, will be same every month. Then you can have frequency. You can pay your SIPs weekly. You can pay your SIPs fortnightly. You can pay your SIPs monthly. The most common option is monthly, and the most common date that I've seen people following is first, 10th, or the 30th. So, for example, you put here first. Then there is an option that the companies are offering nowadays, that is increment in your SIP. For example, if I'm investing, for example, 20,000. and I want to increase my SIPs every year by 10%. So I'll just select here 10%, and what it will do is from next year onwards, it will start on deducting 27,500, and after another year, it will start on charging 30,250. So this is a very good option that the companies are offering nowadays. You can, increase your investments yearly by this option. So this is basically the, basic stuff about investing into the mutual funds and how you can know something about a mutual fund, how you can, compare a mutual fund. Now, this is a very good website. For example, I just told you that I got a job of 1 lakh rupees and I am thinking of investing 25,000 every month into the stock market. And I will just search SIP calculator step up. Step up SIP calculator, because I just show you now that you can also step up your investments. So I'll just go here. I'll just type in 25,000 a month. I'll just select 10% as the step up. Now, as I am very much bullish about the Indian stock market, and I'm investing a large portion of my money into smaller companies, the companies that can be the next HDFC, the companies that can be the next Reliance or the next, uh, you know, Apollo hospitals. So I am very much bullish and I am investing into the smaller companies. So I'll just select this as 18%. I am expecting 18% of investments annually. And I just select the time period as I just told you that I'm planning on retiring at 50 years of age and I will be joining the company when I am 22 years old. So 22, 50 minus 22, that is 28. So I am thinking of investing my money till the age of 28. Every month, starting from 25,000 rupees a month, annual step up of 10%, and expected return rate is 18%. If you just go here, you will see how much crazy amount of money you can generate by just doing this. You will see that the amount that I have invested in that time frame of 28 years is just 4 crores, and the returns that I am getting is 42 crores. That is just phenomenal. And the total value of my portfolio would be as high as 46 crores. That is some crazy amount of money by just starting with 25,000. And if I just think of, let it be, I do not want to increase my SIP every year. I'll just pay 25,000 a month, but I'm still bullish I'm still bullish on the stock market, and I'll keep on investing in things which have higher risk because they have higher returns to offer. I just show you that this particular fund gave 48%, 48 freaking percent this year. And in 5 years, it gave 24.25%. And this is just mid cap. I am telling you to, that I am investing in small cap. So I am getting more than that. Still, for God's sake, if the market crashes in a particular year, or if something bad happens, or if I'm not able to invest for a particular year or anything, I am taking expected return rate to be 18%, and I have set this annual step up at 0%. I'll not increase my investment by anything. I'll just pay 25,000 a month, even if I'm earning 20 lakhs a month. Whatever I'm earning, I'll just pay 25,000 a month, but the time frame is 28 years. Still, my investments are just 96 lakh 38,729, and my returns are 25 crores, 25.3 crores, and the total value of my investments would be 26 crores. You're seeing that crazy amount of money you can make by just being consistent. Same goes, you must have heard with your studies, your parents would have told you that be consistent, keep on working hard, and one day you will get the fruit. This is what it is with mutual funds. You just need to be consistent. You just need to be following your investment style, you just need to, put in some amount of money that you are earning into the stock market, but be consistent with it. And then you can generate this amount, this sort of crazy money by just investing 25,000 a month. I mean, everyone can do that, man. It is not a big task. It's just that for if you reduce the time period by just 8 years, you will see what drastic change it makes in on your portfolio. In just 8 years, from in 20 years you are making 6 crores, and in 28 years you are making 26 crores. You're seeing that is close to 4.5 times. You just need that money to be invested in the stock market so that it can grow. Your first crore will take around 8 to 9 or even 10 years, but after that your portfolio will keep on increasing. I'll just show you, man. I'll just show you. If I keep it as 11 years, by investing 25,000 a month at expected return rate of 18% per annum for 11 years, you will generate your first crore. In 12 years, your 1 crore will grow into 1.3. In 13, that will grow into 1.6. Yeah, 1.6. In 14, that will be 1.9. 15, 2.3. 16, 2.89. 17, 3.5. 18, 4.3. It will just keep on doubling after that. 20 may it will be 6. 21 may 7.3. 22 may 8.8. 23 may 10.6. 24 may 12.7. 25 may 15. 26 may 18. 27 may 21.9, close to 22, and 28 may 26. Jump off directly 4 crores. So, you just need to be consistent with your investments, and by just following, if you are going to the gym, you go there and you try to build a routine. That is what you should be doing with your personal investments. You just need a fixed mindset that you will be investing this amount of money every month into the stock market, and by doing that, you can generate this amount of money. And even if you adjust for inflation, it will be close to 10 crores. It will be close to 7 to 10 crores uh, at this point of time. And even at this point of time, 7 to 8 crores is sufficient at the age of 50 to retire and live a comfortable life, because you will not keep you will not be keeping those 8 crores into your bank account. You will just need 1 crore for you will just need like 20, 30, or 40 lakhs for a year for your personal expenses, and rest you can keep invested into the market, so that 8 crore will keep on increasing. And technically you will be just taking the interest that you will be earning on that 8 crore, and that will be your personal expenses. So that is how you can manage your personal and finances and make yourself financially independent and have a comfortable life and retire early, because no one wants to work at the age of 60 or at the age of 70. Totally different case if you love working into offices, or you love doing that. If you have a business, then that's a completely different scenario. But if you want to retire early, this is what you should be following. Now I'll just show you real quick the type of how you can compare different type of mutual funds. I'll be comparing a small cap fund. This is Access Small Cap Fund. I've personally invested in this fund, and this has given me close to 36-35% in a year. I'll just, you just go here, and you can see everything about it. How much this has given in 1 month, how much this has given in 3 months, 6 months, 1 year, 3 years, 5 years, 10 years. So if you are in the game for a longer period of time, it has given better returns than the category average. But if you are here for a shorter period of time, then of course you cannot expect a higher return. You just need to understand that if you are investing into mutual funds, you should have in mind that I will not stop investing, you know, today. I will not stop investing, and I will keep on investing till a period of time. So here you can know everything about a fund. I'll just give the funds that I have personally invested. So I'll just show you what I invested while I was in I was doing my internship. So I just saved some money from my stipend because it was not that much. So I just saved whatever I could, and this is my mutual fund portfolio. I have personally invested in these three mutual funds, and this is a 1 year time frame or a time frame of maybe 11 months, and this has given me good amount of good percentage of return. I invested in HDFC Sensex BSC fund. So how is this fund different from other funds? I just told you that there are two types of fund. One are active funds and then the other are passive fund. So this is a passive fund. The reason this is a passive fund is because you must have heard about Sensex or Nifty. Sensex and Nifty are uh, the two main uh, what you say main thing that you follow, because India we have Sensex and Nifty, and then in US you have Dow Jones, SIP 500, and different kind of uh, benchmarks you have. But in India we follow Sensex. Sensex is basically a group of top 30 funds of India, and Nifty is a group of top 50 funds of India. So that is a benchmark that we follow. This particular mutual fund, if you click on it, this just invests blindly into the Sensex. Whatever the Sensex has, whatever the allocation is, this blindly follows. So that is the reason the expense ratio is very low. It's just 0.2%. So that is the difference between an active and a passive fund, that the expense ratio is much lower. And of course, the returns would also be much lower. It will not be, skyrocketing, but still 21% is a very good return. I was not expecting this much because this fund only gave 21% this year because the market was growing very good. But for 5 years, it has given 15%. And from since its inception, it has given close to 14%. So this is a basic difference. The other fund that I personally invested in, these are the top three funds that I basically recommend everyone because it is a perfect blend of, safer and riskier options. This particular HDFC Sensex fund is balancing my portfolio and saving my mutual fund portfolio from anything that can happen. I had a bigger portfolio. I just withdrawn some money to for a personal reason. But I used to invest more and more, but I'm just keeping it, a little balanced because I am expecting the market can, go down, and I should have some sort of capital to reinvest. Then this is Axis Small Cap Fund. Axis Small Cap Fund invests into smaller companies. The expense ratio is higher than that HDFC, but is still lower than many mutual funds. It is 0.55%. 0.55% is not that higher expense ratio when you compare a small cap, but it is still higher than HDFC because this is an active fund. There is a mutual fund manager that is constantly monitoring it and is taking decisions, and for that he's basically charging a fee. And it is investing into smaller companies, as the name suggests, small cap funds. And in this year, the small cap and mid cap funds outperformed everything. So this gave me a very good return. Then there is Kotak Emerging Equity Fund. This fund invests into mid-cap companies. Mid-cap companies are the companies that are sandwiched between smaller and higher cap funds, large cap companies. You can consider them uh, bigger than small cap companies, slightly safer than small cap companies, but still there is risk. So here you can see 0.38% is the expense ratio, and then all the things that there are all the companies that this mutual fund has invested in. So here you can see everything about the fund, and also you can create mandates on coin. So this, what is this? I'll just explain you real quick. I just show you that you can buy a mutual fund. For example, I am buying HDFC mid cap opportunities that I just show you. You will go here SIP, and you put in this everything, okay, an automatic step up, and here there is an option mandate. Mandate means that the amount that you are setting will automatically be deducted from your bank account at that particular date. For example, if I am setting first of every month to be the date when I need my money to be invested in that particular fund, so this mandate will help the mutual fund in deducting that particular amount every single month. So this will automatically deduct the money without even asking you. This is just a one-time process. You need to give your broker the permission of charging the amount, and then the amount will be automatically deducted. If I select this, so I do not have to every month go here and pay through UPI or net banking or credit or debit card. It will be automatically debited from my bank account. So this is how you can invest, and you can also compare here different type of mutual fund: HDFC mid cap, Kotak emerging equity. So you can see here that what is the fund performance, and you can also add another Mirai Asset large and mid cap fund. So this is how you can compare different type of fund. You can see minimum investment. You can see the dividend type, scheme, sub scheme. Sub scheme means the strategy that they're following, assets under management, their return that they have generated in 1 year, in 2 year, in 3 years, launch date, exit load, their expense ratio, and their fund manager. So this way you can compare different type of mutual funds before investing. And then I already show you. If, for example, I just go here and search for Access Small Cap Fund, and when you click on all, starting from 2018, it has given. I'll just go here. Kotak Emerging Equity Fund. It was started in 2013, I guess. Yeah, it was started in 2013, and it gave an annual return of 21.1%. If I just follow this SIP calculator step up, I just go here, put in the same percentage, that is 21.11, annual step up of 10%, monthly investment of 25%, and it was started in 2013. So we would have completed 10 years by now. This would have helped us make a portfolio of 1.39 crore by just investing 47 lakhs. And if this fund were to follow the similar kind of returns that it has offered in the past 10 years, and you follow it for 30 years, this fund would have helped you. That is damn crazy amount. 130 13 crores. It 30 crores? 13 crores. 130 crores. Damn. That is crazy amount of money. So you're seeing how much money you can get by just investing into the market. The amount is big because this is increasing 10% every year, and at one point you will be giving close to 10 lakh or 15 lakh because every month it is increasing 10%. You just remove this, put it as 0. SIP calculator 21.11 for 30 years. Still, you are making a lot of money, man. That is a lot of money. So you just need to follow your particular investment style. You just need to be you just need to be uh, following the whatever investment style you have chosen. You just need to be consistent with it, and you can one day make a very good amount of wealth for you, because you can make money from trading, but you cannot create wealth from trading. Every trader you go on the internet, they will always say that they trade with a fixed capital. Traders like stock burner, they are also investing with the fixed capital of 5 to 7 lakhs. Even if they're making a crore every year, they are investing all the money that they are getting as profits into the stock market or fixed return or whatever it is, but they are not using every penny that they are earning to trade. It is very important to diversify a portfolio to make calculated decisions for you, so that you can create a wealth in the later period of time. I think I've already spoken a lot. If you have any doubts, you can ask me, or you can type in the chat.
There is already one question in the chat. You can open it.
Is stock market really predictable? If you see the past year returns, uh, and if you're planning to be in you if you're planning to keep be invested into the market for a longer period of time, then of course you can make a good amount of return of a good amount of money by expecting a 20% return or 18% return per annum. But stock market is not really predictable, because I just showed you now that this year it gave 50%. Another year it might not even give 1% return. It can be showing you 0% return. So if you are there for a longer period of time, for 30 years, then it is surely it has been seen previously in the history that stock market has a good amount of return. You just need to be invested into the market. And as India is a growing economy, it will keep on increasing. I am not seeing anything bad about it. PM Modi is doing a lot of things about it. You just saw, I was seeing this when the Saudis came to Gujarat. I bought a stock that was Gujarat Apollo. Gujarat Apollo basically is related with the infrastructure of Gujarat. And there were deals about the infrastructure that directly affected the stock that I bought. So it, grew 10% in a single day. So that is how the stock market is working, because a lot of investments are coming in. Indian economy is growing. India avoided recession. A lot of companies were seeing recession, but India avoided that because India is growing day by day. There are a lot of developments going on. A lot of companies are putting in their money, and people are slowly recognizing India as a world leader. So I don't think there will be any problem with it, and India will keep on increasing. So if you are consistent with your investments, you can surely make this amount of money. So you can see stock market is predictable, but consider a longer time frame. ETFs are exchange traded funds. They are good sort of investments, but uh, you know there is still always a thing called SIP, which is easier to follow in case of mutual funds. So I think that mutual funds are better options than exchange traded funds, because for ETFs, if you are selling your ETF, you will need a buyer. And I have seen cases where people tried selling their ETF and there were no buyers, because it is listed on the stock market. So if you want to sell your holding, there should be a buyer, which is easier for mutual funds because I just told you that there are open-ended funds. They just keep on investing. They just keep in. They just exist there in the market for a longer period of time. So there is no problem in the liquidity. But ETF may, I feel there is a liquidity problem.
We had another question on WhatsApp, and it was, if someone has 30,000 rupees, should that person invest in a one mutual fund, or should he diversify in three mutual funds?
I think, yeah, you should, of course, be, diversifying your money in multiple mutual funds because it's, for example, this year everyone is saying that the large cap companies will grow because last year was the year for small cap and mid cap companies. So if you invested all your money in mid cap or small cap fund by seeing the past performance, you will lose money. I'm not saying that the small cap or mid cap companies will not grow this year, but I'm just saying that if you make a balance of everything, then there is a higher chance of making money. Because there was a point I was heavily invested. I was just investing into the IT stocks, IT mutual funds, IT stocks, and then you would have, of course, seen that IT funds were not even performing for one complete year. So in that year, I made huge losses. So that is a mistake that I personally made. So I would not suggest you to follow just one investment scheme. Just try to diversify it to avoid losses. And whatever
Okay,
the
thank
amount
you.
is, be it 30,000 or 1 lakh. Real silver in commodities, the commodity market is works completely different way. Commodity markets में you get ownership, but you do not get anything physically. जैसे रियल सिल्वर यू गो एंड बाय तो वो दैट इज डिफरेंट ये ऑन पेपर है उसका यू विल बी कम्प्लीटली बेनिफिटेड अगर जो भी उसका मार्केट मूवमेंट होगा बट इट इज काइंड ऑफ सिमिलर बट नॉट कम्प्लीटली सेम उसका टैक्सेशन इज डिफरेंट because if you buy gold bonds and if you buy physical gold, so the taxation is different. You get tax benefits if you buy gold bonds. But we will cover all that in a different video. This session was just about mutual funds. Any other doubt? I think we should wrap up now, Vedansh.
There is just one more question.
Yeah.
After that, we can wrap up in the chat only.
Should we select stocks from mutual fund holding? Yes, you can do that. I personally did that for a year, and it gave me good returns because mutual funds have very good, very very professional people who do a lot of research, who have a lot of resources as well because of course they have a lot of money. If 1% of 50,000 crores is also 5,000 crore, so that is a lot of money. So yes, you can of course follow that, and that is also public information. You will see in news that mutual funds are going with this particular stock because that sort of brings TRP for the news channel, and people also blindly follow. But yeah, you can do that, but just be sure with your research.
Because I think there are no more questions, so we can wrap the session up. So thank you Anmol so much. काफी knowledgeable, काफी insightful sessions था.
Thank you,
तुमने अपना भी
Vedant.
पूरा एक्सपीरियंस शेयर कर दिया, कैसे तुमने अपनी इन्वेस्टमेंट जर्नी स्टार्ट की, क्या क्या पिटफॉल्स फेस की, उससे रिकवर कैसे किया, और अब काफ़ी अच्छा तुम्हारा मतलब पोर्टफोलियो बन चुका है, नॉलेज भी आ चुकी है, तो एक्सपीरियंसेस काफ़ी हैं जो लेटर ऑन लाइफ में हेल्प करेंगे। सो काफ़ी मतलब इम्पोर्टेंट होता है कि अगर जल्दी हम इन्वेस्टमेंट और स्टॉक मार्केट फील्ड में घुस जाते हैं, क्योंकि सुनने में तो अच्छा लगता है कि हाँ जल्दी घुसना बेटर रहता है, पर कोई एक्चुअली इम्प्लीमेंट नहीं करता।
एग्जैक्टली।
एक और क्वेश्चन आया है, क्रिप्टो और म्यूचुअल फंड्स। तो
आई
क्रिप्टो और
थिंक
म्यूचुअल फंड्स।
दैट इज अ completely different debate.
हम्म
We will talk about that.
सेफ्टी के लिए तो म्यूचुअल फंड्स, तो मतलब
हाँ,
कोई रिस्क एपेटाइट पे होता है, अगर सेफ खेलना है तो म्यूचुअल फंड्स पे रहता है, स्टॉक्स और रिस्की करना है तो क्रिप्टो पे जा सकते हो।
वही वही बात मैंने बताई थी ना कि यू कैन
हम्म
ऑफ कोर्स क्रिएट योर वेल्थ, बट ऐसे क्रिप्टो से क्रिएटिंग इज अ बिट डिफिकल्ट। यू नीड टू बी श्योर तुम जिस पर्टिकुलर एसेट क्लास में इन्वेस्ट कर रहे हो। बड़े बड़े ट्रेडर्स जितने भी आप देखोगे, स्टॉक बर्नर वगैरह, उन्होंने खुद शेयर करा हुआ है कि वो अपनी सारी प्रॉफिट्स वो इन्वेस्ट कर देते हैं इनटू सेफर ऑप्शंस। यू कैनॉट कीप योर पूरा वेल्थ इनटू क्रिप्टो। And there are crypto KB mutual funds as well. जिसने it gave close to 16,000% returns. So if you are bullish on the crypto, तो उसमें भी इन्वेस्ट किया जा सकता है।
अब तो एक बिटकॉइन का भी ईटीएफ आ चुका है, तो
हाँ हाँ एग्जैक्टली।
हाँ।
तो वो पर्सनल प्रेफरेंसेस है सबकी। आई पर्सनली फील क्रिप्टो का इतना नहीं है।
ठीक है, सेशन रैप अप करते हैं। बस मैं स्क्रीन शेयर करनी थी बस 2 मिनट के लिए, बंद करना अपनी।
श्योर। थैंक यू। थैंक यू अभिषेक।
थैंक यू अनमोल, थैंक यू सो मच।
थैंक यू वेदांश।
आई एम शेयरिंग माई स्क्रीन, इज इट विजिबल?
हाँ हाँ इट्स विजिबल।
सो जैसे अनमोल ने स्टॉक्स आइडेंटिफाई करने का भी एक मेथड बताया, अगर किसी ने ध्यान से सुना हो, तो सिंपली आप म्यूचुअल फंड पे जाओ, कौन कौन से वो मेन स्टॉक में एलोकेट करके रखते हैं अपने फंड्स, उसमें जाके आप देख लो। फिर उस पर आप अपनी खुद की एनालिसिस कर सकते हो। फिर आप सिंपली, अगर आपको फिर टेस्ट करना है, आपको अगर रियल मनी एक्चुअली नहीं यूज़ करना है, ऑलरेडी आपको थोड़ा वेट करना है, सीखना है, तो वो काफ़ी अच्छा वो है। जैसे सेशन के बिल्कुल स्टार्टिंग में, मतलब स्टार्ट होने से पहले साहिल ने बताया था कि उसने ऑनलाइन गया, टिकर टेप पे उसने स्टॉक्स पता किए, फिर उसने स्टॉक बेट्स पे सर्च किया। तो सेम आप यहाँ पे भी कर सकते हो। आप म्यूचुअल फंड में आराम से जाओ, आप देखो, कोई भी आप गेम ज्वाइन कर लो। सबसे कम स्लॉट्स किस में दिख रहा है? 5 स्लॉट्स इसमें, सबसे ऊपर वाले कर लेता। जैसे आप इसमें जाओगे, सिंपली आप सिंपली जैसे सबसे ऊपर कौन सा अनमोल स्टॉक दिख रहा है? TERP करके कुछ था, कौन सा था?
वो ट्रेप्स थे। वो बेसिकली गवर्नमेंट सिक्योरिटीज थी। वैसे जैसे फेडरल ले लो तुम, फेडरल ने बहुत ज़्यादा अच्छा रिटर्न दिया है। फेडरल
फेड
बैंक। फेडरल बैंक हाँ।
फेडरल बैंक। और कौन सा देखा था अभी?
फेडरल बैंक था, बिरला सॉफ्ट था।
बिरला सॉफ्ट। और कौन कौन से थे अभी?
इंडियन होटल कंपनी। इंडियन होटल कंपनी का
IHC।
एक, हाँ IHC बस। इसका एक मेजर रीजन ये है कि तुम सबने अभी देखा होगा लक्षद्वीप में दे अनाउंस दैट दे विल बी मेकिंग होटल। तो उसके बाद से इंडियन होटल कंपनी इज ग्रोइंग। तो ऐसे तुम न्यूज़ फॉलो करके भी पैसे बना सकते हो। जैसे अभी अडानी ग्रीन, अगर तुम सेलेक्ट, अडानी पोर्ट्स ऑल टाइम हाई पे है। उसका रीजन यही है कि एक तो मोदी गवर्नमेंट की आने के चांसेस है। सेकेंडली उसका सुप्रीम कोर्ट में एक केस चल रहा था जो जहाँ से उनको क्लियरेंस मिल गई। उसके बाद से आई वॉज पर्सनली होल्डिंग अडानी ग्रीन। मैंने 570 पे लिया था और आज वो 1600 पर है। तो यू कैन फॉलो न्यूज एंड ऑल्सो मेक मनी।
सो हाँ, अगर वीकली कुछ फॉलो करना है तो न्यूज़ के इम्पैक्ट पे खेल सकते हैं। लॉन्ग टर्म देखना है तो म्यूचुअल फंड्स के एसेट पे कर सकता है। तो अलग अलग मतलब मेथड्स होता है बेसिकली, स्टॉक्स आइडेंटिफाई करने के, इन्वेस्टमेंट स्ट्रैटेजी प्लान करने के। सो जैसा भी 5 स्टॉक्स हमने देखे थे, अगर इस हफ्ते का एक्सपेरिमेंट करते हैं कि बस म्यूचुअल फंड वाले स्टॉक्स खुद रिसर्च करते हैं कौन कौन से होते हैं, उनके टॉप एलोकेशन से गेम ज्वाइन करके देखते हैं कैसा परफॉर्म होता है। गेम ज्वाइन सक्सेसफुली हो गया, आ गया इस लिस्ट में। गाइस कोई भी जाके गेम ज्वाइन कर लो, मैं लिंक भी भेज देता हूँ चैट में,
एंड
लिख
इट्स
लो।
कम्प्लीटली फ्री, तो तुम यहाँ पे जाके
हाँ हाँ,
बहुत कुछ सीख सकते हो।
टेस्ट कर सकते हो, फ्रेंड्स को इनवाइट कर सकते हो, कंपेयर कर सकते हो किसका बेटर नॉलेज ग्रास्प है इस सेशन में। ठीक है, फिर नेक्स्ट वीक मिलते हैं, सेशंस होते रहेंगे. थैंक यू सो मच फॉर ज्वाइनिंग.
Thank you,
सी यू गाइस
guys.
सून.
Thank you.
थैंक यू अनमोल.
Thank you, Raj.